Welcome back. Today, I want to look at the introduction to public sector accounting. So we are going to understand the state corporation. So a state corporation is an entity incorporated under the Companies Act, which is solely or partly owned by the national government for commercial. So that is a state corporations. Then you can have the examples of entities in public sectors. You have the government or any department of the government. You have the courts, the commission established under the constitution. You also have the local authorities under the Local Government Act. You also have state corporation within the meaning of the State Corporation Acts. You have the Central Bank of Kenya established under the Central Bank of Kenya Act. You also have a cooperative society established under the Cooperative Society Act, a public school within the meaning of the Education Act, a public university within the meaning of the University Act, a college or other education institution maintained or assisted under, out of the public funds. These are some of the entities under the public sector. So we are also going to look at the role of Auditor General. So here one of the roles is reviewing proposed withdrawals from the consolidated fund, and if satisfied that they are authorized by law, approving the withdrawals. So he review all those withdrawals. Then examining disbursement of monies appropriated by Parliament to ensure that they have been applied to the purpose to which they were appropriated, and that expenditures conform to the authorities that govern them. Another role is that auditing and reporting on the public accounts of the government of Kenya, the accounts of all government officers and authorities, the accounts of all the courts and commissions, and the accounts of the clerk of the National Assemblies. Also considers and approve the estimate of the Kenya National Audit Office, as well as determine the remuneration and other terms of appointment of the staff of the Kenya National Audit. So those are some of the roles of the auditor that we have. So you can get screenshot as we continue. So the arrangements for conducting internal audits. So we have some of the arrangements that I'd like to discuss. So reviewing the governance mechanism of the entity and the mechanism for transparency and accountability with regard to the finance and assets for the entity. So that is also another arrangement that is required. Excuse. Then you have the conducting risk-based value for money and system audits aimed at strengthening internal control mechanism that could have an impact on the achievement of the strategic objectives of the entity. We can also talk about verifying the existence of assets administered by the entity and ensuring that they are proper safeguards for their protection. Another one is providing assurance that appropriate institution policy and procedures and good business practice are followed by the entity, as well as evaluating the adequacy and the reliability of information available to management for making decisions with regard to the entities and its operation. So you are going to get all these as the arrangement required or necessary for conducting internal audits. Then what are the responsibility of accounting officer? So we know that the public sectors have these accounting officers. So they are responsible for accounting for such services, such as the treasurer or the treasury may specify. So in respect for which money is appropriated by the parliament. So they are the accounting officer or the accountants. You can call them accountant for the government financial management acts, which they are appointed by the treasury. So their responsibility ensure that no expenditure is made unless it is lawful, authorized, effective, efficient, and economical. So that is one of their responsibility. We also have ensure proper financial and accounting records are kept, as well as ensure that any financial or accounting records kept in electronic format are adequately protected, which shall include ensuring that such records are adequately backup and adequately protected against computer virus. You also have prepare and submit accounts for each financial year under the Public Audit Act 2003 for audit by the Controller and Auditor General, as well as ensure that adequate arrangements are made for the management of liabilities. Another one is that ensure that all contracts are complied with. Also ensure that all applicable procedures are followed in the acquisition or disposal of property, and that adequate arrangements are made for the custody, safeguarding, and maintenance of property. Then, as well as bring any concerns he has that a proposed decision or policy originated from his ministry, department, or commission may result in resource being used in a way that is unlawful. So those are some of the responsibilities that we have for accounting officers. Hope we are together. And like we continue as we take screenshots, we're going to look at the accounting techniques in the public sectors. So this one, the techniques that are applied, we have the budgeting, accounting, cash accounting, accrual accounting, commitment accounting, and fund accounting. So if you look at the budgetary accounting, this one will refer to the preparation of the operating accounts in a format of a budget. So the concept here is a forecasted cash flow and operation, and it must this must be limited to the budget estimate. So here the budget or the budgetary accounting officer will aim at ensuring efficient of managers, communicate the entity goals to employees, provides control, also provide a yardstick or a benchmark for measuring performance of employees. So that is the budgetary accounting. For the cash accounting, here only cash inflows and outflows are recognized and recorded. So it doesn't recognize any revenue or expenditure that has been received or paid. So these are just summarized cash hooks or cash. Then you have the accrual accounting concept. Here the accrual concept is utilized that revenue and costs are recognized as they are earned or incurred. So the accrual concept here is utilized. Then we have the commitment accounting. This one recognizes the transaction when the entity is committed to them. So this means that a transaction is not recognized when the cash is received or paid, or when invoices are received or issued. But at an early stage when orders are issued or received. So when the commitment is recognized or is assured. Then you have the fund accounting. So here the fiscal and the accounting entity shall with the self-balancing set of accounts record cash and other financial resources together with all related liabilities and residual equities or balance and changes therein, which are segregated for the purpose of carrying on specific activities of attaining certain objectives in accordance with special regulation, restriction, or limitations. So that is all about the fund accounting. It has to be under that. It's a self-balancing set of accounts which will record all those cash, financial sources, liability, residuals, equity, all that, as you can see. So those are the accounting techniques in the public sectors that we are going to we can look at them. Let's continue and look at the government funds. So this one are used to account for the sources or use and balance of government's expendable general government financial resources and the related current liabilities. So that is all about the government funds. So we have the types of funds or the government funds. We have that one for the general funds which accounts for all financial resources except those required to be accounted for in another fund. Then you have the special revenue fund, accounts for the proceeds of specific revenue sources which are legally restricted to expenditure for specified sources. Then we also have the capital project funds, accounts for financial resources to be used in the acquisition or construction of major capital facilities. And then you also have the debt serving fund or the seeking funds, which will account for the accumulation of resources for and the payment of general long-term debt, principal and interest. We also have the revolving funds, which provide financial resources for achieving some specified objectives. We also have proprietary funds, which accounts for the operations that are financed and operated in a manner similar to private business entities. We also have the fiduciary funds, especially the trust and agency funds, which will account for the assets held by the governmental unit in a trustee capacity or as an agent for individual, private organization, other governmental units, and other funds. So those are some of the funds from the governmental funds. So we can also look at the cash-based accounting. A minute. We can continue on cash-based accounting. And before I forget, the government expenditures, they have been classified as recurrent expenditure and development expenditures. So whereby the recurrent expenditures are incurred by the government on the normal activities, as well as the development expenditures are incurred for the establishment of new agricultural industrial projects, installation of new plant and machinery, construction of various projects. So those are the two things I'd forgotten to say. So let's continue. You have the cash-based accounting. So under cash-based accounting, cash receipts, payments, and balance are recorded at the time of the cash transaction, irrespective of when the related goods and services are produced or received. So that is a cash-based accounting. And it does not recognize non-current asset in the financial statements, as well as all expenditure are written off as expense during the year they are incurred. So that is about now the cash-based accounting, which is utilized by these public sectors. So we have the cash-based accounting advantage. So we have some of the advantage that we are going to look for the cash-based accounting. So we are told that it is widely used and traditionally accepted measure of government's short-term impact on the economy. Then it is also considered tangible, easily prepared and tracked. Then also For a number of government transactions, such as grant and salary, there is not likely to be significant difference between cash and accruals. Then we can also look at the cash-based accounting disadvantage. It also has some of the disadvantage. It fails to recognize future costs associated with current government activities. Then it does not properly align costs with the provision of goods and services. Then cash-based accounting system does not ensure sustainability of government's activity as it is more concerned with the current rather than focusing on the future or a long term, as well as the financial statements do not provide details about the assets held by the government and its agency. Their ability incurred by it are not clear, and it is difficult to gauge the total picture of the government's performance, as well as the budgetary process that goes with it is not based on outputs and outcomes. So these are the disadvantage of utilizing the cash-based accounting. So we are going to look now at the use of performance-based measures in government budgeting. Mostly they use the accrual output-based budgeting, the OBB. So which are these performance or the use of using it? So the FAD departments or the ministry for outputs, the service and products rather than input. So it is raised by the funding departments. Another use of these performance-based measures, it is that improving the government's management of its funding of services, is the purchaser interest and its resource-based ownership interest. Another one is improving the quality of performance information available in the government. Then you also have the departmental managers for strategic planning, resource allocation and operation control, as well as providing a sound basis for internal resource allocation. So these are some of the performance-based measures. What about the challenges? We also have the challenges of utilizing the accrual basis budgeting measures. We have the correction of information on capital assets and properly identifying them. That is also another challenge. We also have building capacity within the public service to ensure that those using the system have sound knowledge of accruals accounting principle. This can be achieved through or extensive training. Another challenge is making entity changes to ensure wherever possible that the purchasing, asset management and accounting functions are integrated in the new system. Then you also have the full accrual accounting should be the way forward for the government to ensure public assets are utilized properly in providing intended service to taxpayers. So the adoption of the full accrual accounting should be utilized. Let's continue. Then you also have to improve access to reliable financial information and the internal control system for decision makers that can help the government to make better decisions and improve the allocation of scarce government resources, as well as provide a more comprehensive picture on the government and its financial condition by reporting on all assets, so that the governments know which resources are available for future use and liabilities to indicate the potential demand on future resource to meet obligations, as well as promote consistent and independent verified reporting practice and increase the likelihood of a cultural change in government spending. So these are some of the challenges on implementing the accrual output-based budgeting. So I'd like to, if you have any questions, I'd like you to comment below. Also understand that I give personalized coaching. So if you need any topic, subtopic to be coached, just let me know and create a personalized video for you, and any questions that you may ask, I'll get back to you. So this is all what I wanted to discuss today for the accounting on public sector, on the public sectors. So thank you, and let's study more and for the better tomorrow. Thank you.